All right, so today we are going to be taking a deep dive into the silver market.
Ooh, exciting.
It is going to be a good one. I think this one is a three-parter.
Wow, yeah, there's a lot to unpack.
There is a lot to unpack, and the silver market is particularly interesting because there's a lot of kind of conspiracy theories floating around
Oh, yeah.
about it. And we're going to try to, suss out what's real and what's not.
Totally, yeah.
So we are going to be looking at the Commitment of Traders Report,
Okay.
or the COD report, as it's often called.
Catchy.
Yeah, it's released every week, and it gives us a snapshot of what the major players
Okay.
and the futures market are doing.
Futures market.
So it basically tells us who's holding what and what positions they're taking.
So we can see, like, are they bullish? Are they bearish? Are they...
Exactly.
Yeah.
It gives us a sense of, like, the sentiment
Yeah.
in the market.
Okay.
And we're going to be looking at this in the context of silver.
All right, silver, let's get into it.
Specifically, this theory that the silver market is being manipulated.
Okay, I've heard rumblings about that.
Yeah, it's a popular one. And a lot of it centers around this idea of short selling.
Short selling. Okay.
Yeah.
So I guess, like, the big question here is, like, how can just a handful of institutions
Right.
really influence the price of something like silver?
Yeah, because you would think, like, silver's a physical thing.
Exactly.
Right? Like, it's a commodity. It's mined out of the ground.
Yeah, it's not like a digital asset or something like that. It's
Oh,
something
yeah.
tangible.
So how is it that, these big players can supposedly, like, push the price around?
Right, yeah.
Well, that's what we're going to try to find out.
Let's do it.
So I think a good place to start is with this COT report.
Okay.
You mentioned futures markets.
Yeah.
And that's a big part of this whole story.
Okay.
So can you tell us a little bit about what futures contracts are and how they work?
Yeah, so basically a futures contract is an agreement to buy or sell an asset at a set price.
Okay.
On a specific date in the future.
Got it. So you're basically like locking in a price
Exactly.
ahead of time.
Yeah, so let's say I think the price of oil is going to go up.
Okay.
I can buy a futures contract for oil at today's price.
Okay.
And then if the price of oil goes up in the future, I can sell that contract for a profit.
So it's like you're making a bet on the future price
Exactly.
of oil.
Yeah, and these contracts are traded on exchanges, just like stocks.
Okay.
And they're used for all sorts of commodities, not just oil, like silver, gold, wheat, you name it.
So how does this COT report fit into all of this?
So the COT report, it breaks down the different types of traders in the futures markets.
Okay.
Like you have your big regulators, your hedge funds, your commercial traders, like companies that actually use the commodity.
Right. So like an actual silver mining company or something.
Exactly.
Okay.
And it shows us what their positions are in the futures market, like how much they're holding long or short.
So we can see if they're betting on the price going up or down.
Precisely. And this gives us a glimpse into the overall market sentiment.
Okay.
Are the big players bullish on silver or are they bearish?
I see. I see. And this is where things start to get interesting with silver, right?
Yeah, because here's the thing. The volume of silver traded in futures contracts,
Okay.
it absolutely dwarfs the actual physical silver market.
Wait, so you're saying that more silver is being traded on paper than is actually being mined and produced?
That's exactly what I'm saying.
That's wild.
Yeah, it's kind of crazy when you think about it.
So what are the implications of that?
Well, it means that what happens in the futures market has an outsized influence on the price of silver.
Even if it doesn't reflect the actual supply and demand for physical silver?
Right.
Okay, that's starting to make sense now.
Yeah, so if a group of big players wanted to, they could potentially manipulate the price of silver through the futures market.
By opening more short positions.
Exactly.
Okay, so before we get into how they could do that, can you just remind us what short selling is and how it works?
Okay, so short selling is basically betting that the price of something is going to go down.
Okay.
So let's say I think the price of silver is going to drop.
Uh-huh.
I can borrow some silver from someone,
Okay.
sell it at the current price,
Uh-huh.
and then if the price does go down, I buy it back at the lower price and return it to the person I borrowed it from.
And you pocket the difference.
Exactly.
Okay, so in this scenario, this silver, you're basically borrowing silver, selling it high,
Yes.
hoping the price drops, and then buying it back low.
Exactly.
And then you return it to the person you borrowed it from.
Yep, that's short selling in a nutshell.
And that's totally legal.
It is legal, yes, within certain regulations,
Okay.
but it can be risky.
How so?
Well, if the price of silver goes up instead of down,
Uh-oh.
you have to buy it back at a higher price.
So you could lose a lot of money.
Potentially a lot of money.
Okay, I see why people might be concerned about this manipulation idea.
Yeah, and when we look at the COT report for silver, it does raise some eyebrows.
Like, what do you mean?
Well, according to a recent analysis, the four largest traders
Okay.
in Conex silver futures
Uh-huh.
have holding a combined short position of about 312 million ounces of silver.
312 million ounces. Wow.
To put that into perspective, that's almost 40% of the entire annual global silver production.
That's a huge chunk of silver.
It's a massive bet against silver.
Yeah.
And then when you add in the next four largest traders,
Okay.
the total short position balloons to a staggering 404 million ounces.
So almost half of the world's annual silver production.
Pretty much, yeah.
That's a lot of silver, and that's all betting that the price is going to go down.
Yeah, it's a really concentrated bet.
So what happens if they're wrong?
Well, for every $8 increase in the price of silver,
Okay.
those four largest short sellers could be looking at about $3 billion in losses.
$3 billion.
Billion with a B.
Okay, so the stakes are pretty high.
They're incredibly high.
So it makes you wonder, are they just super confident that the price of silver is going to crash?
Right.
Or is something else going on?
That's the big question, isn't it?
It is, and it's one we're going to continue to explore in part 2 of this deep dive.
I can't wait.
So stay tuned, folks. We'll be right back.
See you soon.
Hey there, Mining News Network listeners. We hope you're enjoying the latest updates on breaking news from mining companies across North America. If you love staying informed about the latest developments in the mining world, we've got a quick favor to ask. Don't forget to hit that like button if you're enjoying the show. It really helps us out. And if you haven't already, make sure to subscribe to the channel and turn on those notifications so you never miss an episode. We've got more exciting stories and expert insights coming your way after the break, so stay tuned and thank you for listening.
Welcome back, everybody.
All right, so last time we were talking about this massive short position in silver.
Right, we left off on a bit of a cliffhanger.
We did it with those, four biggest traders holding almost half of the global annual production.
Yeah, a huge, huge bet against silver.
Yeah, and billions of dollars at stake.
Exactly.
So I think to really understand what's going on here, we need to dig a little deeper into how these futures contracts actually work.
Okay, yeah, let's break it down a little bit.
Because I think that's kind of the key to this whole manipulation theory.
It is the key for sure.
So let's imagine for a second that you're a farmer.
Okay, I can do that.
You've got a field of wheat that you've just planted.
All right.
And you're hoping to sell it for a good price when it's harvested.
Makes sense.
But you're also a little bit worried about the possibility that the price of wheat might drop.
Yeah, that's always a risk with commodities.
Right. So what do?
Well, that's where futures contracts come in.
Okay, how so?
So you could find someone who agrees to buy your wheat at a set price when it's harvested,
Okay.
regardless of what the actual market price is at that time.
Ah, so it's like a safety net for the farmer.
Exactly. It protects them from price swings.
I see. And on the other side of that contract, the person who's agreeing to buy that wheat,
Right.
they're making a bet that the price of wheat will go up.
Exactly. They're hoping to buy it at that pre-agreed price and then sell it later for a profit.
Okay, so both parties are getting something out of this.
Right. One person is managing risk, the other is speculating.
Okay, that makes sense.
Now, let's apply that same concept to silver.
All right.
You've got these big institutions like banks who are using futures contracts to speculate on the future price of silver.
And they can use leverage to control a much larger amount of silver than they actually have the cash for, right?
That's right. Leverage is a powerful tool.
So it's like they're amplifying their bets.
Yeah.
Okay, and we talked about this before, but the volume of trading in these silver futures contracts is huge.
It's way bigger than the actual physical market for silver.
Yeah, which means that those bets, those leveraged bets,
Right.
they can have a really big impact on the price.
And that's where the potential for manipulation comes in.
Okay, so let's talk about those tactics again.
All right.
We touched on leverage margin call spoofing.
Right.
Are there any other tools that these big players might be using to manipulate the market?
Well, there's this thing called naked short selling,
Naked short selling.
which is basically when a trader sells silver short without actually borrowing it first.
Wait, they're selling something they don't even own?
Yeah, it's pretty wild.
How is that even allowed?
Well, it's controversial. There are rules against it, but it can be hard to enforce.
So they're basically hoping that they can buy the silver later at a lower price.
Exactly. And if they're right, they make a big profit.
But if they're wrong,
Then they're in trouble. They have to scramble to buy the silver to cover their position.
and that can drive the price up even higher.
Exactly. It's called a short squeeze.
So it's a risky game.
Very risky for both the short sellers and the market as a whole.
And it definitely adds to this whole idea that the silver market is being manipulated.
It does, yeah. It adds fuel to the fire.
So if we assume for a second that this manipulation is happening,
Okay.
how are they actually doing it? How are they using all these tools to suppress the price?
Well, the theory is that they're basically creating this artificial oversupply of silver,
In the futures market,
right, on paper.
by flooding the market with sell orders,
Exactly.
and that drives the price down,
Right, and that can trigger those margin calls.
which forces smaller traders out of the market.
Yeah, it creates a domino effect.
And as the price drops, The big players can buy back silver at those lower prices to cover their position.
And that's where they make their profits.
So they're essentially rigging the game
You could say that.
and profiting from it.
And profiting from it.
Okay, but if this has been going on for years, as some people believe, why hasn't anyone stopped it?
That's the question, isn't it?
Yeah,
It's really hard to prove market manipulation.
especially when you're dealing with these big institutions.
Yeah, they have a lot of resources and they're very good at covering their tracks.
So it's this constant battle between the regulators and the manipulators.
A game of cat and mouse.
But it's not just about profits, right?
No, there are other factors at play.
Like what?
Well, we talked about the fact that silver isn't on the U.S. critical minerals list.
Right, and that's kind of strange considering how important silver is to so many industries.
It is strange, and some people believe that it's a deliberate attempt to downplay silver's strategic importance.
So maybe there's some national security concerns at play here too.
It's definitely possible.
It's all very intriguing.
It is. It's a complex issue with a lot of moving parts.
And it's one that we're going to continue to explore in part 3 of this deep dive.
Can't wait.
So stay tuned, folks. We'll be back in a moment to wrap things up and talk about what all of this means for investors.
See you soon.
All right, so we've spent the last 2 parts of this deep dive going pretty deep on this silver manipulation theory.
We have, and it's a lot of process, right?
Yeah, it's a lot to take in. I mean, we've got these big players maybe manipulating the market.
Using leverage and all these complicated tactics.
Yeah, and then this question of silver's strategic importance and why it's not on that critical minerals list.
Right, it's a real head scratcher.
So for the average investor or someone who's just, trying to understand this market,
Yeah.
where do we go from here? Like, how do we navigate all of this?
Right. Is there even a way to invest in silver without getting caught up in all of this potential manipulation?
That's the question.
It's a great question, and I think the first thing to keep in mind is that
Okay.
there's no one right answer here. There's no magic bullet or foolproof strategy.
Okay.
But there are definitely steps you can take to manage your risk.
Okay.
And maybe even profit from silver,
Okay. I like the sound of that.
even if the playing field isn't exactly level.
Okay. So what are those steps?
Well, I think the most important thing is to understand the fundamentals of the market,
Okay.
like the real underlying factors that drive supply and demand.
Okay. So like, what are the long-term trends for silver?
Exactly. How is silver being used both in industry and as an investment?
So do your research.
Yeah, do your research, read up on the silver market,
Gotcha.
talk to experts if you can.
And basically try to cut through the noise?
Exactly, because there's a lot of noise out there, especially around this manipulation theory.
Yeah, so much speculation and conspiracy theories.
But we need to focus on the facts.
Okay, so let's say we've done our homework.
Right.
We understand the fundamentals.
What's next?
What are our options for investing in silver?
Well, one approach is to focus on physical silver.
Okay, like actually buying silver coins or bars.
Exactly.
Why is that a good option?
Well, remember all that talk about manipulation?
Yeah.
That's mostly happening in the futures market.
Right, where people are trading contracts?
Yeah, but when you own physical silver, you're stepping outside of that game.
It's like you're taking your money out of the casino
Yeah, that's a good analogy.
and investing in something real, something tangible.
Right, something you can hold in your hand.
Okay, but doesn't owning physical silver come with its own set of challenges?
Yeah, sure, you have to think about storage security insurance.
Those are all valid concerns.
They are, but there are companies out there that can help you with that.
Okay.
So it's not as daunting as it might seem.
Okay, so physical silver is one option.
Yeah.
What about those of us who prefer to invest through the financial markets?
Yeah.
Are we just kind of stuck being pawns in this game?
Not necessarily.
Okay, go.
There are ways to invest in silver through the markets while still minimizing your exposure to potential manipulation.
Okay, give me some examples.
One strategy is to look at silver mining companies.
Silver mining companies, okay.
Yeah, because their stock price is often more closely tied to the actual production of silver,
Okay.
rather than all that speculative trading that happens in the futures market.
So you're basically bypassing the paper market.
Exactly. You're betting on the long-term value of the actual metal.
Okay, that makes sense.
Of course, there are risks with any mining company.
Yeah, I can imagine.
You know, operational challenges, environmental concerns, geopolitical instability.
all those fun things.
But it can be a way to diversify your silver holdings
Okay.
and potentially benefit from that growing demand for silver that we talked about earlier.
Okay, so physical silver mining companies.
Yep.
Any other options?
Another possibility is to explore silver ETFs that are backed by physical silver.
Okay, so ETFs are exchange-traded funds.
Yeah,
So they're like baskets of stocks or other assets that you can buy and sell on an exchange.
exactly. And in this case, those ETFs would be backed by actual physical silver.
So it's kind of like a hybrid approach.
Yeah, you get the ease of trading a stock, but you also have that assurance that your investment is tied to real silver.
I like it. I like it.
You just want to make sure you do your homework.
Okay,
And choose an ETF with a good track record
got it.
and transparent holdings.
All right, so we've got physical silver mining companies, silver ETFs, backed by physical silver.
Yep,
Those are some pretty good options.
I think so.
But I still have this question in the back of my mind.
Yeah.
If this manipulation is as widespread as some people believe,
Uh-huh.
is it even possible to beat the system?
That's a tough one.
Yeah.
And I don't think there's a simple answer.
Okay.
But I think the key is to be informed.
Okay.
Do your due diligence and really focus on the long-term fundamentals of silver.
Okay.
Don't get caught up in the hype or the fear-mongering.
Right.
Focus on the facts.
And play the long game.
Exactly.
Because silver has been around for a long time.
It has.
And it's not going anywhere anytime soon.
It's not.
And those industrial uses are only going to increase.
They are.
So even if the market is being manipulated in the short term,
Right.
I think in the long run, the true value of silver will eventually win out.
I agree.
Well, that's a good note to end on.
It is.
I feel a little bit better about this whole silver thing now.
Good. I'm glad to hear that.
So thanks for taking us on this deep dive.
Of course. It's been my pleasure.
And to our listeners out there,
Yes.
do your own research,
Absolutely.
talk to a financial advisor,
Good idea.
and never invest more than you can afford to lose.
Wise words.
All right, folks, that's all for today.
See you next time.
Happy diving.
Thank you for listening to the Mining News Network. If you found this content helpful, please don't forget to drop us a like and subscribe. If there are topics or companies that you would be interested in or like us to cover next, please leave a comment down below.